Mic check and screen share check, please. All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for February 21st, 2022. And we have just a couple of currency pair trades to work through, so this will be a quick one. All right, we're going to start with Wojcik on 5 minute on the Aussie. He's got a bit of a Z3 pinch happening here. Notice how they're pinching. He gets the like a Z3P, and he's using like the far side Z2 as his wrist box. That's a legitimate shot, looking for a target of the VWAP and the RL270. It doesn't pan out. He takes the tight stop when he's supposed to. It reverses again. He takes it again for the same shot. It takes the PSAR stop like he's supposed to. Now notice that he's got 3, lower highs, I guess, or 2 lower highs. And the lows are getting lower. So that generally is creating this downward pressure slope. He takes the third one like he's supposed to on a breakdown, below the 270. Takes the, I would say you could take the PSAR stop on that one instead of, that's probably the standard wrist box. He thought about taking that one. That's one that I would like to take because it's now crossing the VWAP also. And this lower high didn't even get to the PSAR or the Bollinger Band mean or the 270. Takes about a 1, 2, 3 exit to get paid. He stays out of the chop here. Gets 2 rising lows and then gets it as it crosses the VWAP. 1, 2, 3 exit gets paid. Stays out of the chop. Notice that when you're getting this kind of range compression on the Bollinger Band means, that's a good time to continue to wait for the trade you want, which is the Z3 pinch. And then, oops, yeah, you got to keep taking the trade. So this was, this still got paid on kind of a grinding morning. So that's good work staying with the program. This one is the Bitcoin. Also on the 5 minute. He's got that pinch and it picks up a super pinch, and that's the one you want. This was like a fake one. We might have thought fake one go to, but it didn't go to. It just rolled over again. So this is a great scratch. And then an even better re-entry. Again, this is that same pattern, especially on the downside. You would like to take that as a collapsing dragon. Pretty good exit for 4.3. This might have been another +2 available on that one. He stays out of the chop, gets the pinch. Now notice that this is not a super pinch. This is a Z3P, yes, but it's not a super pinch. Why? Because the RL270 is way out of the pinch box. So what you get is when the Bollinger Bands start compressing after big moves, At some point you have a sideways quiet channel, which is where the Crocodile River grinds you to death on those little sharp teeth. But then when the frog box intraday compresses enough that the Z3 lines are inside a frog box, then you get a Z3 pinch. And that's very good, because this is an abnormally tight pinch, which means that the breakouts can be considerable, like this one. This can get even further pinch. So when you have a Z3 pinch, and now we plus 4 regression lines are all contained inside that frog box, then you get a equals a super pinch. Then that's the one you want. I mean, you want the Z3 pinch, but you also want the, so you get the RL10 is inside the box, and that's always going to be inside there, because that's the price, and the Bollinger Bands are framed around the price. You'll get the RL10 or the RL30 inside there. You'll get the RL270, or I'm sorry, RL90. And then you'll get the RL270. So when all 4 of those RLs are inside the frog box, when it's a Z3P, then you get a super pinch. So that's exceptional. And that's exceptional for 2 reasons. Number one, you have the abnormal pinch caused by the Z3 lines being inside the frog box. But then you have the abnormal price agreement between all 4 timeframes, who all are saying that current price is the correct price. And so from that little acorn, you're going to get big breakouts in multiple legs. So when this breakout occurs, what happens is you get 1 leg down, 2 legs down, and notice the RL90 and the 30 and the 10 all join up again down here at the Z3P. But that move was so fast and so far that the RL270 is slow to join it because of math. So then when it's down here in the Z3 pinch, you say, what's it going to do from that critical state? Because that is a critical state. You know, the 2 unsurprising moves would be, first, a return to the RL270, which is like the regression line fractal framework setup, that when you notice how far that is from the 270 down to the 10, you say, that's the opportunity that it may make that move. And that's what it did here. The second thing that happens that's extraordinary out of this one is another leg down. So you would take this as leg 1 down, leg 2 down, and you would expect a leg 3, or if you're really fortunate, this whole thing would be a leg 1 on a larger scale, and you would take that entire move as leg 1 and think that there's another one down below, right? So what happens on this one, though, is you get the Z3 pinch, and then it's a simple return to the RL270. And now you can see the 270 and the VWAP are acting like a magnet inside here. And then this thing is collecting again a nice tight pinch. And you're thinking, okay, here's another chance. Here's another chance for a breakout, and it gives you that. It comes down almost the same move down that it had up. So that distance of how fast and how far it moves in that short period of time is how much power the traders have versus the long-term buy and holders, right? So that's what makes it a trade, short-term versus long-term. So the short-term, we're looking at the RL10, long-term, we're looking at the RL270 as that measure of long-term fair value. Over here in the super pinch, they agreed that that was the fair price. So which way is it going to go? I don't know, but the move is likely to be large, so you follow it. Then after it's made that large move, you say, well, is this just going to stay down here so long that the RL270 comes down and joins it? Or is this going to move back to the long-term fair value in the VWAP? In this case, it moved back. So that's how we think about the RLFF regression line fractal framework. That analysis works on every time frame from 1 minute to 1 month, whatever your bars are. It's uncanny that you get price agreement, and then what you do is you measure the maximum distance from the between the 270 and the 10, and that's how much power the traders have to move it away from the herd. Okay, that's how much power they have. So nice work from Wojciech on for 8R on that one. Let's see. So Luke's got some work to do in here. He's noticing that 2 of his losses reached a maximum favorable excursion of 1 of an R and still managed to turn that into a losing trade. So we don't want to do that. But he does bring home 3. So he's got that next leg down continuation. That's a good trade, good scratch. Re-enters, good scratch. Great re-entry here with a nice tight stop. He considered a second position when it broke above that previous Z3 breakout. I might have tried this one like a Kata 2 because this failed to get through the dragon, and now you're getting like an emerging dragon here. But he takes a good exit here, only gave back a little piece for 4.8, gets the Kata 2 re-entry right away, manages to keep 0.6, but again, he gave back about 2/3 of the open gain. So that's one where, in retrospect, gave back a lot, but I say you kept this much. That's not unreasonable. He goes for the rollover short, and here he's looking for that to get to this support level, and if that breaks, then to this support level, and if that breaks, then this gap should bring the price all the way back here. So he's got about 3 legs down. There's the 270. So this is a reasonable short. So is this one. You're playing for that move in both cases. He was able to get a nice tight stop on both of them. Got this entry. This is the one that hurts. With this risk, probably had maybe 2R, but only kept 0.5 of it. So we gave back a lot on that one. Then being a little gun shy, he waits a little bit late to get back in. He might have gotten in here, but still that's trading the PSAR break. So I don't mind that. He got paid. That's good. This is one where he takes the full R loss. That happened pretty quick. He was slow to get the exit in, or the stop and reverse, and then gave back plenty. Got paid a little bit here, lost a little bit here, lost here. Still, that's a pretty good work. That's pretty good work for the day. I don't think that there were that many egregious errors. Maybe the only one that is this one, because you're outside the Z3 and still gave back that much. You know, what was probably working on you on that one was you saw this move, you held, and now it looks like it's resuming. And then you take this one. I mean, the only thing you got to watch there is you had a lower high after a Z3 excursion. So maybe you could cut that off here, but really that's not that much better. So, you know, I think we're okay. Yeah, he notes that his maximum favorable excursion of all trades was 18 and he only kept 3. I think some of that has to do with, you know, there were some extreme moves inside here, maybe, that made it look like an exaggerated goodness. So I wouldn't take that. I'm not seeing a lot of really egregious errors on this one. Just a little bit of sloppiness here. And after a couple losses, I could understand how this one feels like it's finally working. So you wait long enough. At least you didn't let it go negative. I mean, you didn't know that it wasn't going to come down here and you got bottom tick, but you don't know that. And then this might have been just a little slow on the reentry, but still, that's not a huge error. Yeah, this one hurts. That big spike, not much you can do about that. I'd like to have seen you taking this one again on that down, up, and failing. I don't know how far down that went, but that was a potential shot right there. All right, that's everything we got for today. We'll get this published and posted, and we'll be ready for them tomorrow.